Welcome everybody to another eye opener. This is Market Wealth Daily's quick little video chats we do with top traders, and we've got Blane Markham back here with us. So exciting to have you back, Blane. Loved reading the Market Periscope this week. You got your eye on a lot of stuff going on, and I want to get an update on how it's playing out because I'm looking at the headlines, and the thing I thought was going to be the big deal for the week turned out to be a big old nothing burger. The whole China talk thing, it just kind of fizzled out in terms of its impact on the market. Now everybody's turning and looking at the next, piece of candy laying on the counter. I want to see what you got to say about it.
Yeah, absolutely. Well, first off, just thanks for having me here again, John. Love to be here on these live chats and get here to come and share my thoughts with the folks watching at home. So, with that, as you said, coming into the week, there was the big hyped up, China trade talks taking place over in London. People started wondering, like, well, what's going on? Because we thought this was going to wrap up on Monday, and it kind of
Mhm.
stretched into Tuesday, and later in the day, Tuesday, we're even saying like, oh, maybe this might even stretch into today being Wednesday. But things wrapped up yesterday. As you said, it's still nothing, nothing complete, solid concrete coming out of that. So it was
Yeah,
it
I
was
think
like,
they had talks to agree to have more talks, I think is what it was.
yeah,
So
which I mean, yeah, I guess in a way can be construed as positive. And I think that's kind of how the market's taking it. It's given a little bit support today to stocks. Just seeing the fact that the trade talks didn't blow up and both sides went storming out of the room, and we're right back to 145% tariffs. So, as long as we're avoiding that, I think that's positive. So, continued progress, keep talking. I think for now that will satiate the market. So, we are getting a little bit of support from that, but it certainly wasn't some, just blowout, just like, oh my gosh, this is the best deal ever. Stocks are going to 7,000 on the S&P 500. So,
yeah. Well, and so the thing that I look at this now is I was kind of had some hope that this kind of coiling up that we're seeing here in this range lock that we're tied into. As you do that, and we talked about it the other day, start to watch the volume. And I've seen the volume kind of pick up over the last couple of days in a range lock market. To me, that's just building up pressure. That's coiling, and it's looking to make a move one way or the other. So just wondering if that's your same perspective on this as well.
yeah, absolutely. I mean, I think you're definitely touching on something there, John. And I'll go ahead and just pull up my charts. I always like to start off just kind of just giving a brief overview of the market at the index level. Always like to focus on the S&P 500. It's really representative of of what a lot of stocks are doing out there. But I think you're right. As you said, the volume past couple of days, it has ticked up a little bit. We've had a nice stretch of 4 positive days in a row. And really, in the last 2 trading days, today and Wednesday, or sorry, today and yesterday, Tuesday, we've really kind of broken above the ceiling of that range that we've been kind of stuck in. Now, I still think that we are likely probably going to be bound to that range, at least maybe on the upper end of it for a bit, but we have jumped out above that top end of the range right around 6,000 in the past 2 trading days. So as you can see, there's the 6,000 level right there. And, right now where markets currently stand, I looked before I hopped on, we're only 1.6% move to the upside away from the all-time high. That's 1 or 2 good, like really solid trading days worth of moves away from going out and challenging that previous all-time high we set back in February. So, we could be at a point where, that range is still really significant that we've been talking a lot about, between roughly 6,000 and the rising 200-day moving average. I still think that's going to come into play, and it could be a scenario where we go up, we try and challenge it, and we don't quite take out those highs yet, and we come back down. I think there's a lot of evidence in the charts that we certainly could be in for a move like that. That we still move up for another day or two from here, kind of go up and begin to look like we're challenging that all-time high, come back and settle down for a bit, consolidate, and then maybe take it out in a few weeks or over the next month or so. And that's kind of what I'm seeing in the chart right here. We're still in a great trend. The underlying technicals really solid. Still, trading well above our 200-day moving average. Great series of higher highs and higher lows here. But as you can see, I have the Keltner channels showing up on this chart here as well. You can see in the past few days, we have actually finally broken back up above that upper Keltner channel band here. And that's signifying that in the shorter term, stocks have gotten a little overextended in the short term. Not saying that they can't continue, making a constructive bullish trend higher from here, but in the short term, at least, it's very likely that we're going to see a bit of a retraction, a little bit of a retracement, in the week or so ahead. So, as you can see, we're hovering right around 6,050 right now. So we've jumped up above that upper Keltner channel. And then we're seeing that reciprocated down here as well. We're seeing confirmation of that in this lower chart down here. I'm going to draw your attention to this one too, John. This is an RSI, or relative strength index chart. And one of the traditional functions here with an RSI chart is it helps also to serve as an overbought, oversold technical indicator for traders too. So when you see that stocks, or in this case, an index is RSI, is trading above this level of 70, well, traditionally you get above that level of 70, you're starting to get a little bit into overbought, a little bit nosebleed territory, particularly when you start getting up into the 80s or even into the 90s. So the 90 is very, very rare. That doesn't happen very often. But typically when you start getting up, 75, 80 or higher than that, generally you're going to start, you're set up for a retracement to happen in the coming trading days. And you can see that's exactly where the S&P 500's RSI currently finds itself. It's currently trading at about 81. A few minutes before I logged on, it was actually at, I think, roughly 82. So it appears that it actually might be falling right now as we're speaking. Indicating a bit of a pullback off the highs intraday, but that's also confirming that, things have gotten a little overextended, at least in the short term, and are certainly due for a pullback into that range that we've talked so much about.
Yeah, and looking at the chart, and we talked about this a couple of weeks ago too, how we've been through all these different market climates in the last few months, but you can't lose sight of the bigger picture. Look back all the way to the left on the chart. You go back about a year ago, and you're going to see this kind of, uh, climb up with pullback, climb up with pullback, and just kind of really respecting the Keltner channel, but prairie dogging every once in a while, just kind of peeking its head up above to see how far it can stretch. But that is the personality of the market that we have seen in the longer recent past. What we saw over the last few months is exceptional.
Yeah.
It seems to me we might be kind of rolling back into that it's starting to write in, for lack of a better word, the noise, the wildness, the madness of the media and the hype and all the other things going on. And it's going to kind of get itself back to normal. It'd be interesting to see if that's actually what's going on.
Yeah, exactly. There has been just such, insanely strong momentum over the past 2 months. And, of course, anybody who's followed the markets for a long period of time, that can't last forever, as much as we would
Mhm.
absolutely love it to, right? It'd be great if you just logged in and just saw your account going up every single day, day after day. Unfortunately, that's just not how the stock market works. Of course, we all know that. But, as you were saying, over the past year, kind of through this stretch along in here, heading into the end of 2024, we were in a nice, solid, constructive, bullish market, but it was more of a, think about it in these terms, more of like a 2 steps forward, 1 step back type of bull market, where like you have a
Mhm.
nice expansion upward, you pull back a little bit, make 2 steps forward again. What we've seen over the past 2 months has been like a 4 steps forward, 1 step back. I mean, it's just been just crazy movement higher. So of course, that eventually that momentum has to slow down. Valuations have to try and catch up or normalize. There's going to be profit taking. So that's what we're anticipating to happen here. And I think there's a lot of evidence in the technicals of this chart to suggest that we probably are going to see that in the coming week. But, again, don't let that detract from, the really strong technicals. Again, here's just another nice market internal signal right here. So this is looking at the actual advanced decline line for the S&P 500 index. And so specifically, we're talking about this down here. This is actually the daily chart of the S&P 500, but we're focusing on this red line down here. And I like to show it on this website because I think they really illustrate it nicely. But this is just, again, this is looking at the advanced decline line for all of the S&P 500 stock issues. So this is just looking at the total volume traded each day, how many shares are rising and falling. And so this is just a cumulative line showing that. So again, you can see we made an all-time high back in roughly mid-May on this advanced decline line. That's showing a nice, very strong bullish breadth thrust upward, nice momentum behind stocks. You can see we had a bit of a pullback, and then it's been slowly trying to climb back up ever since. And we're right on the verge of breaking through and making a new all-time high there. So we do have, very nice solid technicals underlying this recent move. They're still intact. There's really great breadth starting to build again behind stocks. But again, still, I think we're likely due for a bit of a chance for stocks to catch their breath moving forward. So keeping all that in mind, John, I'm still looking at similar pockets in the market to what I talked about on Monday. I know I shared this chart for XLK on Monday and said I think that should be Monday's bar right there. You can see XLK has continued to rally nicely since then. This is still probably the top sector ETF. Is this the technology sector that myself and our team here, Hughes Optioneering, are watching. There's been great relative strength shown by this sector recently, and in fact, at today's current prices, at the current price level, in fact, should we close here or higher, will have finally set a new 52-week high for the tech sector, which is pretty remarkable. You can see we kind of bounced around about 3 times around this level right here, but today, with today's trading, we've actually finally taken out those levels. And should we close, again here, that's again another really nice sign. Seeing a sector break out to a fresh 52-week high. Well, today is the first day that we'll have done that ever since these back here were set. So that's an incredible sign of strength in the tech sector. Again, it's a little overheated, certainly as indicated by trading above the upper Keltner channel. You're seeing that also replicated down here below in the RSI. It's trading up near 80. It's over 86 in the RSI. So of course, certainly a little overheated at current levels, but this is definitely where we're watching, for some strength. Once we get a bit of a pullback, a little better entry point, this is the sector we're going to be targeting, looking for new opportunities, putting new money to work. And again, you can see that just great relative strength here. This is that ratio chart between showing the XLK tech sector ETF divided by the S&P 500 price. You're seeing that line slope up right here. So this is just indicating we have very strong relative price action. So XLK is outperforming the broader market, meaning the S&P 500. That's what's indicated by this upsloping line right here. So still a great, great looking opportunity. And of course, even though the sector is a little overheated, there could be certain spots, there could be components in there, individual stocks that are not quite as overextended and maybe actually offering a great setup right now. So just with that in mind, that's where we're keeping our eyes on for new opportunities, John.
Yeah, it looks good. Looks like a great opportunity here. Love watching the different sectors, find out who's leading, who's kind of leading the charge. Tech has typically in the recent past been a good leading sector. So, like I said, it's just more confirmation that we're getting our feet back into the normal ground of where the market was, and that gives us a little bit of an idea of what to expect. If it gets back into those same type of patterns, those are very tradable. To your comment, 2 steps forward, 1 step back. I can do that dance. 4 steps forward, 1 step back. I'm stepping on toes. So I'm ready for this little waltz here.
Absolutely, yeah. So, with all that in mind, we kind of have that on the back burner, but watching it very closely. But, regarding today's markets, we're still seeing a nice lift. The stocks are behaving quite well across the board. So, we're still looking for opportunities, perhaps a little bit more surgically, a little, more very, nuanced in picking our spots. And so what I'm going to talk about next, I'm actually going to pull up one of our favorite indicators that myself and Chuck, Helene here on our team, that we have all designed. It's called our Copilot indicator. And, you may have heard of this, you may have experienced using it yourself. But, in times like this is a great time to go ahead and lean on a tool just like Copilot that actually can do a lot of the legwork for you in finding trades that are in really great setups right here, right now. This is scanning markets actively, during the day and finding stocks that, according to the Copilot algorithm, are on a buy signal and are presenting good opportunity in that day's trading. So actually logged on just ahead of time to see what some of the top buy signals for today, according to our Copilot trading tools, are. And the one I settled on was actually for Visa right here. It spotted a handful of great looking buy signals and opportunities really in the past about week and a half, 2 weeks of trading for Visa. But on here, if you're not familiar with Copilot, the buy signals are indicated by this green up arrow right here. And down here below, we also have 2 additional studies that help confirm the strength of that buy signal. So as you can see, looking at, this is today's bar right here, the one my mouse is on, you can see we have a nice solid green up arrow underneath that. So that's indicating we have a buy signal for Visa today. And then to vet that buy signal, to see what the strength of it is, we can look towards these two studies down here below. And so what this green bar right here is, this is confirming that we have very strong buying pressure behind the stock. So that's indicated by, first off, just having a very tall bar. So the taller the bar, the better down here. And it's color coded as well. We love to see these bright green bars down here. So you see a bright green bar, that's indicating great buying pressure behind Visa stock. Now, the final one is down here. This is a momentum trend indicator confirmation study. And so what we like to see here, this is measuring a couple different terms of MACD lines. And we like to see this one that's kind of highlighted. You see the one right there. That's our shorter term MACD. And you see that it's trading above the other line just below it. So that's indicating our shorter term MACD is actually trading above our longer term. So that's double confirmation for this buy signal that we have stronger momentum over the short term compared to slightly longer term. So that means there's some nice thrust behind this movement. So this is a very, very strong bullish buy signal for Visa. So with this, even though, the markets, look a little extended, at the index level, perhaps even at a sector level, well, this is a unique setup right here because, of course, Visa, this is a financial, but, it's a little different than, say a traditional, bank, that's, think of, like a JP Morgan or a Wells Fargo. Visa, of course, they're a credit card company. So they're a little more in the fintech space. So they're kind of merging, those two big themes in the markets: financials, technology. Those are two of the best relative, two of the sectors showing the best relative strength right now. So this is kind of a unique setup right here. So, again, while parts of the market or index level might be a little overbought, John, this is a really unique setup right here that I would actually look to take a trade on today, because this is a great looking signal according to our Copilot tools here. And, this is, it's in the right sectors. It's where the money's moving right now. So I'm going to go ahead and pull up a trade and see if I can find a trade live here for everyone to see what we can find for this Visa buy signal. So right here, I have an options chain pulled up for Visa. And so when I was looking just a little bit earlier, I was looking at perhaps, with these Copilot buys, it's trying to identify, bullish trades. So these are, specifically bullish signals to take in the markets. And, generally you could take them either as just buying a stock, you could go long a call option, buying a directional call option, or, you could even put on a call option debit spread trade as well for these signals if you really wanted to. And with Visa, it's a bit of a higher price stock. So I'm actually going to go ahead and look at putting on a call option debit spread for Visa just to see, what the trade actually looks like. So I'm looking at the August 15th options available here. And of course, I'm looking at the in the money calls here. And so I'm going to start somewhere right around here. I think I'm going to start right around here and just see what the prices come out to. Yeah, this looks like this is a really good setup right here. This looks like it is exactly what we would be looking for a new trade to put on. Of course, I'm not going to put this trade on myself, because I don't want to be talking my own book here and putting a trade out and then, having people see that. And but anyways, so you can see right here, this is a trade I just found here live, and this is a solid looking debit spread. It doesn't have quite as much downside protection as perhaps ideal, exactly as much as I would prefer perhaps, but this is definitely still a trade that I would consider taking. It's a little more of an aggressive call option debit spread. It's a little closer to the money, but it still has a nice profit potential. You can see here, you still, if the stock were to fall by 5%, which for Visa would be a very big move. This is more, even though it's, a fintech stock, moves a little bit more than some traditional financials. Still a 5% move for Visa would be pretty significant. So you can see the stock, even if it were to fall by 5% at option expiration, would still be set up to produce this 27.6% return. Again, if the stock was flat at option expiration, it'd still make the full profit potential of 27.6%. And then, of course, if the stock were to increase at all by option expiration, again, still set up for that 27.6% return. Again, that's all based on using these current option prices right here. Let me go and just make this full screen so you can see a little bit better. That's all based on, getting in at this current option price for these two right here, coming out to a net cost for this bull call debit spread of 3.92 points per contract. So that's just a great signal I spotted today using our Copilot set of tools, which, of course, you if you don't have those and would like to get your hands on them, definitely reach out to our team here at support@chuckhughes.com, and we can get you connected and get you set up to begin using those if you want to. But just a great opportunity, even in a little bit overstretched, a little bit extended market. There's still opportunities out there, and tools like Copilot can help you find them.
Yeah, I think we're going to start spoiling people if we make it this easy, right? So if we give them trades like this all the time, but that's exactly what you guys do all day long, right? So I know that using the Copilot indicator is one way that you guys find them. I know you use a bunch of different tools. In fact, you've got a pretty amazing opportunity. Every week you do your weekly profit opportunity that you send out on Sunday. It's here you go. I did the homework for you. Take a look at it. Hey, make sure you validate it yourself. Make sure it's something that fits your style, your risk tolerance, everything else. But here's the trade. And we mentioned it recently, but it's just $1 to give it a shot. $1, try it out. See how you like the trades. Let Blaine do some of the heavy lifting for you. He's a big guy. He's strong. He can do that stuff. So yeah, definitely take him up on that. We're gonna put links to that stuff in the email when we send this out to everybody. So if you're watching it, check that email where you saw the replay. And we really we really want you to take him up on that. But love these opportunities, Blaine. I love the kind of safety net of doing the spread on this one. And like you said, you got a pretty big landing strip on either side of you to still be profitable. There's a lot of room for that thing to move and still come in at 27%. So uh, great spot, great find there. Really good setup to share with everybody.
Yeah, appreciate it. Thanks so much. And yeah, of course, like you said, John, have a great deal running on the WPO. You're a little too kind there. I'm just doing just some research for you on the weekends, to put together a nice video newsletter. So definitely hope to see some of you folks. If you're not already a member, go ahead and take it up and give it a shot for a month. Would love to have you over there and let you check out some of the research I do, some of the trades. I put it out on Sunday evenings. But yeah, no, really, excited to be able to find that trade here for Visa live for folks today. I hope they enjoyed seeing kind of my process behind it. It's very similar to how I go about finding things for my WPO newsletter. But yeah, as you see, we have some different tools for different markets. We always try to have a nice set of tool, a nice tool in the tool bag for approaching different markets, because you don't always have the same setup in the market. So, always try to be able to find different opportunities out there as they present themselves. But yeah, we can check back next week on that Visa spread and see how things are
We,
turning out. And
you know we
if I
we will
messed up, then
definitely
you can
be.
hold my feet to the fire.
I will, man. I will totally. And we'll talk about, all the things that are involved when trades go different, but this one looks really good. I don't think that's going to be the conversation next week. I think we're going to be pretty pleased with it. So thanks for taking the time today, Blaine. Great to have you on as always. And we'll be talking to you soon, man.
Yep, sounds great, John. I appreciate it. Hope you all have a great rest of your week.
Thanks.
All right, take care.